this video I will talk about cash flow statements. I only introduce the direct method.
I'm Carsten Berkau, full accounting professor in Osnabrück. My basics clips will help you to understand international bookkeeping.
The case is taken from chapter 32 of my textbook, and we do not go through all the bookkeeping entries. We only focus on the cash bank account and we derive the cash flow statement therefrom. We do not want to discuss each and every bookkeeping entry, but we want to understand the entries in the cash bank account. Please check the story of this case study in the textbook. We now only focus on the cash bank account. We want to understand where do the debit entries come from and where do the credit entries come from. The debit entries will be cash receipts from the share issue, from the issue of the bank loan, and from the proceeds selling the books. On the credit side of the cash bank account, we see payments for interest, for payoff, for rent, for purchases, and for the acquisition. The cash bank account has a debit side, which is for receipts. We indicate this by a plus, and it has a credit side, which is for the payments, which is indicated by a minus. In order to prepare a cash flow statement, it is required that we classify the cash flows. The first category is cash flows from operations. We use cash flows from operating activities. The next item is the cash flow from investing activities. And the last one is the cash flow from financing activities. So our cash flows from the operations will be the proceeds, it will be the rent, and it will be the purchases. Now we see we got one cash flow which is positive and two negative cash flows. We enter these cash flows. So the first one is a cash flow from the proceeds, and it gives us 50,460. The next one is the cash flow from rent, which is a negative cash flow, so we put it in brackets, 24,000. The next cash flow is from the purchases, which is a negative cash flow as well, 32,640. Next we discuss the cash flow from investments. The company buys these bookshelves and pays for them half of the amount which is required, so it gives us a credit entry in the cash bank account to the extent of 8,346. Next we discuss the cash flow from financing activities. Financing activities will be the share issue, will be the bank loan including interest and payoff. The total cash flow for the company is 121,774. We start with the proceeds to the extent of 50,460. The next entry is made for the materials. The next expenditure is the payment made for rent. The investment is the investment in the bookshelves. The cash flow from the financing activities results from the share issue, which is in positive cash flow, so the company receives the money from its investors. The next one is the bank loan, which has been issued by the bank, and that means it has been paid into the company's bank account to the extent of 40,000. Interest is negative 1,700 as the company pays it. The same applies for the payoff. The total cash flow is 121,774, exactly the same amount as we derived from the cash bank account. Now that you have seen the video, take the textbook and study the case.